behavior of the 2016 halving. 4. Halving and its effects. The theory of the halving and the chain reaction that it sets off works something like this. The reward is halved, half the inflation, lower available supply, higher demand, higher price. Miners' incentive still remains, regardless of smaller rewards, as the value of Bitcoin is increased in the process. In the event that a halving does not increase demand and price, then miners would have no incentive. The reward for completing transactions would be smaller, and the value of Bitcoin would not be high enough. To prevent this, Bitcoin has a process to change the difficulty it takes to get mining rewards, or in other words, the difficulty of mining a transaction. In the event that the reward has been halved and the value of Bitcoin has not increased, the difficulty of mining would be reduced to keep miners incentivized. This means that the quantity of Bitcoins released as a reward is still smaller, but the difficulty of processing a transaction is reduced. This process has proved successful twice. So far, the result of these halvings has been a ballooning in price followed by a large drop. The crashes that have followed these gains, however, have still maintained prices higher than before these halving events. For example, as mentioned above, the 2017 to 2018 bubble saw the value of a Bitcoin rise to around $20,000, only to fall to around $3,200. This is a massive drop, but a Bitcoin's price before the halving was around $650. 4. Although this system has worked so far, the halving is typically surrounded by immense speculation, hype, and volatility, and how the market will react to these events in the future is unpredictable. The third halving occurred not only during a global pandemic, but also in an environment of heightened regulatory speculation, increased institutional interest in digital assets, and celebrity hype. Given these additional factors, where Bitcoin's price will ultimately settle in the aftermath remains unclear. How does Bitcoin halving affect Bitcoin's network? Since Bitcoin halving is a major event, it has a major effect on various parties involved in Bitcoin's network. Here is a brief description of how Bitcoin halving affects major stakeholders and talking points in Bitcoin's network. Investors. Halving generally results in increased prices for the cryptocurrency due to reduced supply and surging demand, meaning it is good news for investors. Trading activity on the cryptocurrency's blockchain increases in anticipation of the halving. However, the pace of price increases differs based on the logistics and conditions of each price halving, as demonstrated earlier. Miners. The effect of mining on Bitcoin's ecosystem is complicated. On the one hand, a diminishing Bitcoin supply increases demand and prices. But fewer rewards can also make it difficult for individual miners or small mining outfits to survive in Bitcoin's ecosystem because they may find it difficult to compete with large mining organizations. According to research, Bitcoin's mining capacity is countercyclical to its price. Thus, when the cryptocurrency's price increases, the number of miners in its ecosystem decreases and vice versa. A halving event is characterized by a price increase and can increase the probability of a 51% attack on Bitcoin's network because miners move out of its network, thereby making it less secure. 5. What happens when Bitcoin halves? The term halving as it relates to Bitcoin has to do with how many Bitcoin tokens are found in a newly created block. Back in 2009, when Bitcoin launched, each block contained 50 BTC, but this amount was set to be reduced by 50% roughly every 4 years. Today, there have been 3 halving events, and a block now only contains 6.25 BTC. When the next halving occurs, a block will only contain 3.125 BTC. When have the halvings occurred? The first Bitcoin halving occurred on Nov. 28, 2012. After a total of 10,500,000 BTC had been mined. The next occurred on July 9, 2016, and the latest was on May 11, 2020. The next is expected to occur in early 2024. Why are the halvings occurring less than every 4 years? The Bitcoin mining algorithm is set with a target of finding new blocks once every 10 minutes. However, if more miners join the network and add more hashing power, the time to find blocks will decrease. This is remedied by resetting the mining difficulty, or how hard it is for a computer to solve the mining algorithm, once every 2 weeks or so to restore a 10-minute target. As the Bitcoin network has grown exponentially over the past decade, the average time to find a block has consistently remained below 10 minutes, roughly 9.5 minutes. Does halving have any effect on the Bitcoin price? The price of Bitcoin has risen steadily and significantly from its launch in 2009, when it traded for mere pennies or dollars, to April 2021, when the price of one Bitcoin traded for over $63,000. 4. Because having the block reward effectively doubles the cost to miners, who are essentially the producers of Bitcoins, it should have a positive impact on price because producers will need to adjust their selling price to their costs. Empirical evidence does show that Bitcoin prices tend to rise in anticipation of a halving, often several months prior to the actual event. What happens when there are no more Bitcoins left? Around the year 2140, the last of the 21 million Bitcoins ever to be mined will have been mined. At this point, the halving schedule will cease because there will be no more new Bitcoins to be found. Miners, however, will still be incentivized to continue validating and confirming new transactions on the blockchain because the value of transaction fees paid to miners is expected to rise into the future. The reasons being that a greater transaction volume that has fees will be attached, and Bitcoins will have a greater nominal market value. The bottom line: Bitcoin halving imposes synthetic price inflation in the cryptocurrency's network and cuts in half the rate at which new Bitcoins are released into circulation. The reward system is expected to continue until the year 2140, when the proposed 21 million limit for Bitcoin is reached. Thereafter, miners will be rewarded with fees to process transactions. In 2009, the reward for each block in the chain mined was 50 Bitcoins. After the first halving, it was 25, and then 12.5, and then it became 6.25 Bitcoins per block as of May 11, 2020. Bitcoin halving has major implications for its network. Investors can expect a price appreciation in the days leading up to the halving and after the event itself. For miners, the halving event may result in consolidation in their ranks as individual miners and small outfits drop out of the mining ecosystem or are taken over by larger players. Investing in cryptocurrencies and other initial coin offerings, ICOs, is highly risky and speculative, and this article is not a recommendation by Investopedia or the writer to invest in cryptocurrencies or other ICO. Since each individual situation is unique, a qualified professional should always be consulted before making any financial decisions. Investopedia makes no representations or warranties as to the accuracy or timeliness of the information contained herein. Thank you for watching. For more news about crypto and trading, remember to visit us on our social media, as well as our blogs here in CryptoBotProfits.com.